Absolutely. I 100% agree. The way that we should think about the Federal Reserve is as a cartel of the banks that has a special privilege from the government.
Echo 64, home of alternative economics and contrarian views. Well, today I have a new guest. His name is Jonathan Newman. He's the Henry Hazlitt Research Fellow at the Mises Institute. Jonathan, it's great to have you on. I've been kind of associated, and I followed the Mises Institute for more than 25 years. So it's great to have you on.
Yeah, it's a pleasure to be here. Thank you so much for having me.
Yeah, and you told me that we can go over the big picture, but one topic that I wanted to talk about, and I think the viewers would be really interested because I've been trying to expose the origins of the Fed for many years here on the channel. I mean, I've got The Secrets of the Federal Reserve. I've got End the Fed by Ron Paul. Creature from Jekyll Island, and I've also got Murray Rothbard's The Case Against the Fed. So maybe we can go over the origins of the Federal Reserve, and then we'll move on to other topics.
Sure. Yeah, so the my favorite case against the Fed, you just showed a bunch of different books that were cases against the Fed, including one by Rothbard called The Case Against the Fed. But my favorite is Rothbard's case. Not just that book, but he has another book called What Has Government Done to Our Money? And in Rothbard's analysis, in his perspective, the reason that we should distrust the Fed, be skeptical of it, it's multifaceted. The Fed does many different dangerous things and has many different terrible effects. So the Fed was put in place to try to stabilize banking panics. Before the Fed and even after the Fed, but we could talk about that later. The banking system was prone to runs where people would lose trust in a particular bank, and so they would run to get their deposits out because they were worried that if they got there too late, then they wouldn't be able to get their money out of their checking account. And so banks, since they engaged in fractional reserve banking, banks would often come up dry during these runs. And this of course, was not healthy. This was not good for the economy. If you don't have trust in the banking system, don't have trust in the financial institutions, then it's difficult to extend credit safely. It's difficult to make long-term plans, especially like business plans. And so that's why these banking panics they would often trigger a recession. So the idea behind the Fed was, well, we need some sort of lender of last resort. When banks get into trouble, we need some central repository of reserves, somebody that can come in and bail these banks out. And that way people could have more trust in the banking system. That way people wouldn't feel as much of a need to run to the bank. So maybe we can solve the banking panic problem by having this lender of last resort. But hopefully you see, even with that stated rationale, so on a very fundamental level, it's full of fallacies. It's full of errors because by instituting a lender of last resort, they don't solve the underlying problem. The underlying problem is that banks are engaged in fractional reserve banking. They're not keeping everybody's deposits in reserve. They have many more deposits than they keep in reserves, and they're lending out the rest, which means that they're going to run into these problems. And so if you have a lender of last resort, yeah, you're rescuing a particular bank. You're making it possible for them to last, not go bankrupt during a particular crisis, but you're not solving the underlying problem. And so that's why we continue to have bank runs. That's why we continue to have crises in the banking system. That's why we continue to have business cycles even after the Fed was put in place. And in fact, depending on the different measures that you look at, you could say that it got worse after the Fed, because what does the Fed do? It now incentivizes banks to undertake these the same sorts of dishonest um, and I guess I would say unwise lending practices because now they don't have an incentive to stay afloat. They don't have an incentive to make good loans or to keep a high enough level of reserves because now they have this backstop. They have this government agency that's always there to bail them out. So on a very fundamental level, the first thing that people said we need the central bank for, it seems to fall flat in my perspective.
Yeah, I think it was Walter Bagehot, an English author or writer, journalist, who coined the phrase "the lender of last resort."
Hmm.
And I see that you've got the cartoon behind you. I think
Yeah,
that Andrew Jackson trying to slay the monster, which is Nicholas Biddle and the Second Bank of the United States. I like that one there.
yeah, that's exactly right. Yeah.
Do you think Donald Trump is actually trying to slay the Federal Reserve, or he's just trying to take over it and make it even more of a printing machine?
I think he's trying to make it even more into a printing machine. So, um, from what I can tell, all of his pressure that he's applying towards the Fed is that he's trying to get them to lower rates, trying to print up more money, trying to prop up the housing market, prop up asset prices, prop up the stock market. And so he's not really interested in ending the Fed. So all of the conflict that we see between the executive branch and the Federal Reserve these days, I think it's political theater, and it's not conflict in the sense that the the president wants to end the Fed, like what we had under Jackson, who wanted to end the central bank. But we have a president who wants the Fed to be more accommodative, to have more easy money, to make the economy on paper look like it's doing great.
Yeah, so I guess Donald Trump is no Andrew Jackson or no Ron Paul, I would say.
Oh, unfortunately not.
And you mentioned also Rothbard's What Has Government Done to Our Money? And that's a book that I have as well. And I've recommended it many times to the viewers. And I think that's a book that you don't need to be an economist, or you can, anyone can read that. And it's a really good way to understand money and the system and how corrupt everything is in terms of the money. And you mentioned the reason why the Fed was created. Yeah, and there was the Panic of 1907, and I think that's what triggered the bankers into, or maybe they they did it on purpose as an excuse to bring in the Federal Reserve, because I personally think, and I'm not sure the way you view it, that the Federal Reserve is actually created by the bankers for the bankers, even though it's called Federal and Reserve. We know that it's not federal really, and it doesn't have reserves. But yeah, JP Morgan had to bail out the banks in 1907. And then they had the meeting in Jekyll Island. And there was another panic, Jonathan, in 1837. And there's a book called Our Crowd, and it's about the great Jewish families of New York, the banking families. And in one section of that book, during the Panic of 1837, there was a German banker that had come from Cuba called August Belmont. And he was actually an agent of the Rothschilds in Frankfurt. And he like came in and did what JP Morgan did in 1907. And in the book, the author says that the ancestors of descendants of these people that he interviewed, one of the ladies, old ladies in the 60s, said that Belmont acted as the Federal Reserve, even though Belmont was using the Rothschilds' reservoir of capital. So, do you agree with me that basically the Federal Reserve is really there? Yeah, it's there to at the for the private bankers, not for the general public.
Oh, absolutely. I 100% agree. The way that we should think about the Federal Reserve is as a cartel of the banks that has a special privilege from the government. So legally it's owned by uh, the the banks, the private banks in the banking system. And so a lot of people have this. There's this debate over whether or not the Federal Reserve is private or public, and I think the way that we should think about it is that it's public. It's an arm of the government, but it's an arm of the government that's constituted by this cartel of banks. And so you might wonder like why would any industry want to be regulated by the government? Why would they group together and make this agency that regulates them, imposes rules on them? And so, at least it's not obvious why particular firms in an industry would want to do that. But if you think about what was going on, they were suffering all of these banking crises, and so they wanted to be able to inflate. They wanted to be able to extend loans because if they're able to create fiduciary media out of thin air, if they're able to extend these loans and earn the interest on it on top of people's deposits, then that's pure profit for them. But it comes with this downside, and that downside is, well, what if a bunch of depositors try to get their money out all at the same time? So how do we solve that problem? And of course, the way that they solve that problem is, well, why don't we make this government agency? We'll all group together. It'll have sort of this legitimacy. It'll look very official. It'll have a seal. It'll have the stamp of approval from the government. And this agency will be our regulator, not to not to not in a way that increases our costs, not in a way that makes it more difficult for us to do business, but actually makes it easier for us to do business. That makes it easier for us to continue doing these, what many would say, unethical things, but we can also just flat out call it unwise because it does tend towards banking crises. So having this central bank there, which is a cartel of those banks, that allows them to continue. It puts their unwise and dishonest banking practices on steroids. It institutionalizes it so that they can continue doing that on a larger scale. So that explains why a particular industry would do that sort of thing. But you also see some analogies. You see some similarity or similar events happening in other industries. It's not just banking. So if you remember the whole net neutrality thing that was going down, and we saw big telecom companies, we had like huge huge players in the internet like Google and Verizon and so forth. They were arguing in favor of more government regulation of the internet, which doesn't really make sense. Like, why would these big players, why would they want more regulation on their own industry? And of course, the answer is because they would be there to help design the legislation. They know that having those sorts of regulations makes it harder for new entrants to come into the industry. And so for those corrupt reasons and for those anti-competitive reasons, that's why sometimes industries will actually argue, they'll lobby for the government to regulate them. And I think the same sort of thing happened in the banking system. And they were successful in 1913 when they got a central bank, when they established their own government privileged cartel.
Yeah, and moving on towards to the economy, but before we do that, um, I told you I was at the Mises Institute in '02 with my wife for the 20th anniversary conference. Hopefully, maybe we'll go for the 50th anniversary in 2032. Who knows? But back then, there's very little talk in the general public wise about ending the Fed. People even look at the Fed. It was more the crisis of '08 that led to the move. So before we move to the economy, just wanted to ask you because it's all well and good us talking about ending the Fed, uh, and I think though education and talking to you like this on my channel, and I'm in the UK, but we have a central bank here too, the Bank of England, and I try to expose all central banks. How far do you think we are in terms of waking up the public? And I know sometimes it doesn't require that you wake up everyone up. If you wake up let's say a 5 or 10% of the population, because I think that's the only way to end central banks is that people want it ended. So yeah, how far are we, and what do you recommend people do to spread the word?
Yeah, it's a great question. And this was actually the topic that I chose for my speech at last year's supporters summit. So I gave a talk called "How to End the Fed," where I was answering some of these questions. So if you want a more detailed look at this or answer to this question, I recommend to your listeners to check out that talk. But the way the issue that we have here is that the Fed has been around for a long time. And the Bank of England has been around for an even longer amount of time, right? So what does that mean? That means that they have a very large history of propaganda. They have a long history of indoctrinating the people into thinking that central banking is not only necessary, but it's beneficial. So they are able to portray themselves as this technocratic elite. They're able to portray themselves as like these sophisticated public servants, and they're doing everything that they can to, balance the Phillips curve. So we're not going to cause too much inflation, and we're going to try to achieve full employment. At least in the Fed's case, that's their dual mandate. So they have this long history of convincing the masses of that fact. But of course, if you just look at the history of the 20th century, you see that that's just false. We've had tremendous periods of depression, recession, price inflation. We've had banking crises, and so you have to wonder, like, what are how are they able to convince so many people of this? And I think a part of it has to do with the fact that the Fed it always tries to be as boring as possible. They want to be in the background. They don't want to be in the spotlight. They don't want any sort of political fireworks happening at their press conferences. They want the voting public to basically be unaware of what they're doing. And so that's one way that they're successful in sort of bringing the veil over people's eyes. So that makes our job difficult. If we want to abolish the Fed, it makes it difficult because they have so much history. Now, compared to this situation right behind me, where Jackson ended the central bank at his time, that bank had only been around for a couple decades. And at the same time, there was a popular understanding that central banks cause inflation and that central banks were a menace, really. While there were a bunch of people who were in favor of central banking, especially in DC, there was a sizable proportion of the population that distrusted central banking. So it hadn't been around very long, and we had a populist, anti-inflation, anti-central bank president, and that's what eventually led to its demise. So we don't have that right now. We don't have an anti-inflation president. We don't have a popular understanding that central banks cause all sorts of problems and cause price inflation and cause business cycles. So that's, in my view, that's the first step. It's the education that you were talking about. The first step is we have to educate people about what central banks are, what they do, that they're not necessary and they're not beneficial. And then once we reach that critical mass that you were talking about, it's like it doesn't have to be a majority, but once we actually have a sizable minority of people who agree with us that the central bank is not necessary and it's not beneficial, then we can move towards electing a president or electing people in Congress who will rein in the Fed or hopefully one day abolish it.
Yeah, I mean, it looks like Representative Thomas Massey, he's taken the mantle from Ron Paul for ending the Fed. I think there's another senator from Utah. Is it Mike Lee?
Hmm.
He's anti-Fed. But yeah, here in the UK, there isn't that much of a movement to slay the old lady of Threadneedle Street. And it's funny, Jonathan, that central bankers say that they fight inflation, and we know that they create inflation, and that's what I want to talk about now, and the economy and where you see things. Because on the day we're speaking, it's February 27th. The price of gold is at $5,223. Back when the Fed was created by an act of Congress on December 23rd, 1913, the price, well, gold was fixed at $20.67. And actually, it was fixed at that level from 1833, I think, to 1934, because there was a revaluation, 1833 or 34. I might get the year wrong, from like just below $20 to 2067. So the dollar was a fixed weight of gold for 100 years. And then Roosevelt, of course, revalued it and took the US off the gold standard domestically. So my question is, yeah, where do you see things going in terms of the fiat dollar and the US economy?
It's a good question. I'm not in the business of making hard predictions or like exact predictions, but I can talk about tendencies. So one tendency is that U.S. government spending is growing unsustainably. It's economically unsustainable, but it's also politically untouchable. So that's what I mean by it's like a problem. It's a serious problem because the things that make up government spending these days are politically untouchable. It's like defense spending, Social Security, Medicare, Medicaid, those and also interest on the debt. These are sorts of things that it's very, very difficult, if not impossible, to actually achieve any meaningful decrease in spending in those areas. So because government spending is on this sort of path, and taxes. So what the U.S. government is able to bring about roughly 19% of GDP in taxes on average, something like that. So taxes are sort of stuck there, and it's also politically unpopular to raise taxes anyway. And so what does this mean? It means government spending is on this trajectory of always increasing. It's on this like astronomical path, but taxes are sort of stuck low. And so that means that government deficit spending is on a path to increase. So the amount that the US government needs to borrow is ginormous. It's very, very large going into the future. And this is not like something that's peculiar to the Austrian schools. It's not like you have to be some free market economist to see that this is the trajectory for the U.S. government going forward. Because what I'm saying is something that an economist at the Congressional Budget Office would say, right? So this is not some sort of like controversial statement that I'm making. And so the government needs to borrow a ton, and they can't borrow a ton without causing havoc with interest rates. So what do they do to push interest rates down? They use the Federal Reserve as a money printer. So all of that deficit spending, or not all of it, but a ton of that deficit spending is going to be purchased by the Fed, and they're going to do it with newly printed money, which means for the future, I'm expecting to see a lot more government spending and a lot more money printing. We'll see more attempts to push down the interest rate. They might get into a tight squeeze where it's difficult for them to push down interest rates, especially if we start to see more price inflation, because the Fed has its own PR issue, right? They don't want to be blamed for all of the price inflation. And if they are beholden at all to the dual mandate, one aspect of which is stable prices, then that means they could get into this tight spot where the government needs to borrow a ton, but the Fed can't print up a bunch of money. And so then all hell breaks loose at that point. But in terms of like the dollar versus other currencies, that's even more difficult to predict because it sort of depends on what other countries' central banks do. Will they be more inflationary than the Fed? Will they be less inflationary than the Fed? Who knows? Although I am encouraged by I'm encouraged by all of especially the young people who see this system for what it is, and they're doing what they can to exit, whether it's with cryptocurrencies or it's with gold and silver. So I see people trying to exit this, trying to decrease their exposure to problems with the dollar, problems with the U.S. banking system, and they just sort of see this unsustainable path that we're on, and I think that's part of the reason why we've seen big increases in the prices of precious metals.
Great. And I want to ask you a final question because a lot of people might be wondering what the Austrian School of Economics is. So the question I'm going to ask you, and it's related a little bit to a comment President Nixon made at one point. He said, "We're all Keynesians." So, and it looks like they're even, both sides of the aisle now. Even President Trump is a Keynesian. He seems to think he can grow out of the debt. But could you put it in a nutshell, the difference between the Austrian school of economics and the rest of economics, which is basically Keynesian?
Yeah, so the Austrian School of Economics got its start with Karl Menger in the late 1800s, and there were a couple other economists at the same time who discovered this principle that we make decisions on the margin. Now, the other guys, William Stanley Jevons and Leon Walras, they tried to mathematize this. They tried to think about the way people make decisions in a mathematical way. So, like we're trying to maximize a utility function. But Menger's approach, which got the Austrian school started, was very it was qualitative. It understood that individuals have subjective preferences. The way we value goods and services is subjective. There's no measurement, and if there's no measurement of how much we value something, it means that math doesn't apply. So the reason I say that is you were talking about contrasting the Austrian school with other branches, especially the Keynesian school of thought. And so, like, if you open up an Austrian journal or a book by an Austrian economist, you're not going to see much math. There might be a little bit there, but you won't see much. However, if you open up a mainstream journal, or if you go to any sort of mainstream university to learn economics, then it's basically just an applied math program at this point. So that's the biggest difference between the Austrian school and others, is that we don't use math. We consider individuals as people who are making judgments about the future. And qualitative judgments about the future. We think that the economy is driven by entrepreneurs who are trying to guess what consumers want in the future. And so they arrange factors of production today to make what consumers want. And essential for this process is economic calculation. Entrepreneurs need money prices to be able to figure out what's the best way to arrange resources today to make what consumers want in the future. Without money prices, you can't calculate profit and loss, which means that you don't have that feedback loop. You don't have that. You don't have that guidepost to figure out what to produce and how to produce it. So one thing that Austrians are famous for is criticizing socialism. So Ludwig von Mises developed this famous critique of socialism, which is based on the fact that under socialism, they don't have money prices, and so they can't calculate, and so they can't make rational production decisions. So this is why socialism fails. This is why people starve to death in Venezuela and in the USSR and in North Korea, wherever socialism is tried. The reason why it fails is because they don't have money prices. So that's one very important I would say crown jewel from the Austrian school. If you think about it, that argument, that critique of socialism sidesteps the usual critique of socialism. So the standard critique of socialism is based on incentives. It says, well, if everybody's getting paid the same, then who would take out the trash? If everybody's getting paid the same, who's going to do the dirty and dangerous jobs? But Mises actually granted the socialists this argument that, well, under socialism, human nature itself will change. Under socialism, everybody will be willing to disregard their own individual interests in favor of what the community needs. And so Mises was like, okay, fine, you can have that argument. I don't agree with it. I don't think human nature is going to change, but let's still think about how a socialist economy would work, even granting that assumption. And Mises showed that even if we had this sort of change in human nature, even if everybody became this self-disinterested, I'll do whatever is good for my comrades, even if everybody became that way, you still lack market prices. Even if the socialist central planners have the best interests for the community or for the nation, they still don't have the information that they need to use resources in an economizing way, which is the only way that we have increases in standards of living. It's the only way that we provide for what people want and need. That's probably more than what you wanted, but there's a little snippet of what the Austrian School of Economics is all about.
Yeah, no, it's very clear. And the Keynesian and what we have today is that the government has to step in and manage things. Some people argued that Keynes, what he thought was just like an emergency if there was to be a recession or depression, just to get the economy going. But human nature, Jonathan, always abuses these things. And now we are at a point where here in the UK, I think government spending is 50% of GDP. And I think even Keynes would have been a little bit surprised by that. But he should have known that human nature doesn't change, and too much of yeah, it's there's no such thing as a free lunch, and I think
Hmm.
that's the problem with the Keynesian school, is that they think there's a free lunch for the economy as a whole, and that government can fix things, which is weird because as individuals and households, we need to follow economic law and like spend less than we consume, have some savings. But yeah, I don't really understand why people still believe that it's okay for governments to do that.
Yeah, it's perplexing. Keynesianism is one of those. It's a whole framework full, a whole system full of fallacies and errors, and yet it persists. I think the reason why Keynesianism persists is because it gives governments so much leeway. It's very fashionable, if you're one of these people that thinks that government has the ability to fix problems with the market, because that's what Keynesianism is all about. It's like there's not enough spending, and we can't trust the private market economy to increase spending, and therefore the government should increase spending to pick up the slack. So that, I mean, that's Keynesianism in a nutshell. When we're in a recession, we should use fiscal policy and monetary policy to try to stimulate spending. And of course, the Austrian response to this is that it's not spending that's the problem. That's just a symptom. What really matters is the way resources are allocated. What really matters is the way we're using resources productively to make things that consumers want. So there's no such thing as not enough spending, and there's certainly no such thing as a problem that could be solved by increased aggregate spending, because spending is just a result. Spending is just price times quantity, right? It's the price of something times the quantity that's purchased. So what really matters is the use of the price system. Are we allowing the price system to work? Are we allowing entrepreneurs to take a stab at guessing what consumers want? Are we letting people interact with each other voluntarily? Are we allowing these exchanges to take place? And as soon as you just like get out of the way, as soon as you adopt this sort of laissez-faire approach, then you'll find that the market works. And whenever I say the market works, I'm always worried that people are going to think that I say that in like an ideological sort of way. It's like I just have this sort of like blind faith that the market is going to work, but that's not the case. What I mean by the market works is I understand what prices are. Prices are exchange ratios. And if everybody is looking at and using prices that are quoted in money, it means that we're taking opportunity costs into account when we're making our consumption and production choices. And if we're taking opportunity costs into account when we're making production choices and consumption choices, it means that we're economizing the use of resources. It means that we're not wasting. It means that we're using the resources that we have in the best way possible. And that's what I mean by the market works. It's not like everybody should trust the market because I say so. It's you have to understand what markets are, what market prices are, to see that it's when we're in a recession, and recessions, by the way, are caused by government and by fractional reserve banking. When we're in a recession, the last thing we want is more waste of resources, which is exactly what we get when the government steps in and says, we're going to spend a bunch of money to try to boost aggregate demand to try to get us out of this recession. So the solutions that Keynesians offer are the exact opposite of what we need.
Yeah, there's a fact. Well, there's a how can I say, the Keyneses don't seem to realize that to consume you have to produce as well, and the
Hmm.
Austrians do, right? There's the old saying, every consumer has to be a producer, but the Keyneses don't care because they think if you the government just hands out borrowed money to the consumers, everything will be fine. They'll kickstart that the economy. That's a really typical Keynesian like strategy that always seems to fail. But the other thing, I guess, for the Austrians, therefore, sound money and no central bank, so gold and silver, uh, no legal tender laws, and I think you will find that for the viewers. I highly recommend What Has Government Done to Our Money by Murray Rothbard. And with that, Jonathan, could you give us some final thoughts and also tell the viewers where they can find your work?
Yeah, so you could find all my work at Mises.org. It's mises.org. So I write articles for the Mises Wire there. You can find videos of my speeches, like the one I mentioned earlier, How to End the Fed. So basically, everything I do is for the Mises Institute. I also write academic, like scholarly work, and so you could see some of my publications in the Quarterly Journal of Austrian Economics. And so that I'm more interested in people going to our website, right? So don't just go there to check me out, but the Mises Institute has this huge library, and all the books that we publish are available for free online. We have PDFs everywhere, audiobooks everywhere, and so if you're interested in these ideas, there's a huge resource that you can tap into to learn more. And so I encourage your viewers to check out our website. And if you're in the area where we're having an event, check out our events as well. Our events are wonderful, where we have scholars giving talks, where we have discussion seminars. We have book clubs. We have student programs where undergraduate students come and learn Austrian economics. We have programs for graduate students. And so that's all you can find out about us at the Mises Institute at our website, mises.org.
Yeah, and when my wife and I went to the Mises Institute, we flew from London to Atlanta, and we were picked up by by the people from the institute, and it's not a long drive to Auburn, Alabama. And the other thing I would say is that I'm going to put your video about how to end the Fed here in the cards and in the description. And with that, Jonathan, I'd like to thank you for coming on the channel. It's been a real pleasure speaking with you.
Yeah, thank you so much for having me. This has been great.
You're welcome. Take care.